Marvell Technologies is one of the hottest semiconductor stocks in the markets today. But how much is the stock really worth? In other words, what's a fair price to pay for Marvell Technology stock? I'm going to answer that question in this video by conducting a discounted cash flow valuation on Marvell stock. I'll share with you where I'm getting all of the inputs so you can see for yourself if the numbers I'm using are accurate, too high, or too low. Let's get into the details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So 3 of the inputs I'm going to need for my valuation model are the company's market cap at $102 billion as of this recording, the cash and equivalence balance at $868 million, and the company's long-term debt at $4.1 billion. I'm also going to incorporate the Wall Street analyst estimates on Marvell Technology and its forecasts for free cash flow. Now, looking at these analysts after the $1 billion generated in 2024, they expect the free cash flow to rise to $1.2 billion in 2025, up to $1.98 billion in 2026, $2.85 billion in 2027, $3.3 billion in 2028, and $4.27 billion in 2029. Needless to say, the analysts on Wall Street are bullish on Marvell Technologies and its free cash flow growth prospects over these next several years. Another number I'm going to need is the beta for Marvell stock. As of this recording, according to Yahoo Finance, the beta for Marvell Technology stands at 1.44. In other words, this is riskier than the average stock in the market. The beta is a proxy measurement for risk according to the stock price. Beta measures the movement of a particular stock, in this case Marvell, compared to the S&P 500 index. It's a regression analysis comparing those two factors. And if the company's beta is more than 1, that means that its stock price moves by more than the movement of the S&P 500 index. So if the index moves up by 1%, theoretically Marvell Technology stock should move up by 1.44%, 44% more, both on the upside and on the downside. So you're getting increased beta with Marvell Technology, increased exposure to the fluctuations in the market. Some might prefer that, some might not prefer that, but I do need to incorporate that in my valuation for Marvell Technology stock because I'm always looking at risk versus reward when I'm looking at any investment. So now that we have our inputs, we can jump into our model for Marvell Technology and its discounted cash flow. You could see here starting at 2024 with the free cash flow of $1 billion, rising all the way to $3.29 billion, and then $4.27 billion by 2029. All of these numbers I derived from the Wall Street analyst estimates for Marvell Technology. Interestingly, if the company's free cash flows grow at the rates projected here, that would mean a compounded annual growth rate of 33% over these next 5 years. For the years between 2030 and 2034, I incorporated my own growth rate during this transition period at 50% of the rate of the previous 5-year period. In other words, I took this 32.8%, multiplied it by 0.5 to get 16.4%, and that's the growth rate I implemented for the free cash flow from 2030 to 2034. From that point on, from 2035 to infinity, I forecast the company's free cash flow growing at the long-term rate of 5%. This is the rate I forecast developed economies to grow nominally over those years. And so that's why I incorporated the 5% growth rate into perpetuity. Now, I could have forecasted these free cash flows individually 1 year at a time all the way out to infinity, but that would have been tedious. There is a shortcut to implement, and it's called the terminal value calculation, where you take the free cash flow expected 1 year ahead, divided by the weighted average cost of capital minus the growth rate to come to a terminal value at this point in time, which collects all of the company's free cash flows that are expected between 2035 and infinity. So those are the free cash flow expectations and the terminal value. we need to bring all of these values back to the present because these are free cash flows expected in the future. That's when we'll utilize the weighted average cost of capital of 12.01%. I arrived at that by using a cost of debt of 7.5%, a capital asset pricing model cost of equity of 13.14%, utilizing a beta of 1.44, a risk-free rate of 4.5%, and a market risk premium of 6%. Since the company has a market cap of 102.5 billion, I and long-term debt of 4.1 billion, I applied a debt to equity capital structure of 20% debt and 80% equity for Marvell technology. That is how I arrived at my weighted average cost of capital of 12%. And so when we discount all of those future free cash flows back to today, utilizing this weighted average cost of capital, the value of operations totals 66.7 billion. To this total, we need to add the company's cash balance of 868 million, subtract the debt of 4.1 billion. That brings us to the value of equity of 63.5 billion. But we want to know the price per share, not the value of equity of the business overall. So we divide by the number of shares outstanding of 865.7 million to give us an intrinsic value per share of $73.35 for Marvell Technology. Given that the current market price is $118, this calculation would suggest that Marvell Technology stock is overvalued. Even if I incorporate a margin of safety of 10%, it would still suggest that Marvell Technology price is overvalued. Now, that doesn't mean the price is going to come down. The market can forever disagree with my calculation on what this stock should be worth, and so the market price could remain above my calculation for intrinsic value forever. But this is just my own personal calculation for what I believe this stock is worth and the price that I would be willing to pay for Marvell Technology stock. Needless to say, when the price is above this intrinsic value, I wouldn't be buying the stock personally. Might be different for you. This is just for my own personal calculation. So that's why I conduct these discounted cash flow valuations to give me an idea of roughly the price that I should be willing to pay for these stocks. And so if the valuation were to crash and all else remains the same, I can know what my entry point would be for stocks like Marvell Technology. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.